Hi friends, it's Carlos Hernandez, Coldwell Banker Realty, the Hernandez Group. I just wanted to make this quick video and share with you what's happening in our market. And a lot of these videos really come about from conversations that I have with buyers and sellers. It really gives you some perspective on what's happening. So on the buyer side, I'm getting hesitation, which is very natural because interest rates are higher, affordability is a little bit tougher now. And I'm having some buyers that are in a position ready to buy. I mean, they have their emergency fund, they have their down payment, and now there's this hesitation because the interest rates have gone up. And I totally get that. You know, the right time to buy a house is when you're ready. And what I'm telling so many different folks right now is that, and you guys heard it before, is that you marry the house and then you date the interest rate. So if you need more space for the kids, if you need a bigger yard, you need a pool, you want that ocean view, now is the time to do it. I mean, you didn't have a chance, a few months ago, back in March, right? Because unless you were cash or non-contingent, there was no way for that to happen. Now we're switching into a market where if you do need to sell your home, you're probably going to have a seller that's going to be able to work with you and actually get you into that property. So, and I think you're going to continue to see more of that as the market goes on. So it's really a catch-22 when you think about it. So, you know, when I say marry the house and date the interest rate, what I'm really saying is that refinance out of that interest rate later, but get the house that you want now. You know, when you really think about it, people were okay paying $100,000 to $150,000, hundreds of thousands of dollars over asking price because they had a lower interest rate and inventory was low and demand was through the roof. But now when you switch it and you say, well, gosh, interest rates are higher, but you're going to be able to get a home at market or maybe even below market. I don't want to buy now. You know, gosh, isn't that interesting? If my payment is going to go up, let's say $1,000, $1,500, maybe even $2,000 more a month, I do the calculation on that and I say, if I'm with that interest rate for the next 2 years and I have to pay an additional, $24,000, or maybe I'll go higher, go $50,000, isn't $50,000 or $25,000, $24,000 better than paying a hit and going $150,000 over asking price? So, you want to think about it in that perspective. And then also with our creative financing that we have right now, if you get into a 5-year, 7-year ARM and then, it becomes fixed after that or you adjust out of it, there's so many different ways to look at this. So I just wanted to bring some perspective, and I don't want you to feel deflated if you are thinking about buying a house. Buy a house when you're ready. It's so hard to try and time the market and get it exactly right. You're buying a house because you need a house, right? You need the space, you need whatever it is that you need. So best of luck to you guys. If you have any questions, let me know. But I wanted to give you some kind of what's happening in our market right now. So this has been the fastest rate of increase that the Fed has done in regards to interest rates since 1981. So I understand how that could be very scary because it just keeps going up and up and up. Right now we're about 5.7. Okay, so the last time that we were about a 5.7% interest rate was in 2008. So, not that long ago in the rearview mirror, but we have seen these rates before. The prediction is they're probably going to stay at this rate, let's call it the 5 to 6 range, for quite some time. How long is that going to be is anyone's guess. So going back to maybe those ARMs, that might be a good situation for you. Now, I wanted to talk to you about what's happening in Orange County specifically. So back in March, we were at a 24-day supply of inventory. Right now, we're at 61. Okay, so we've added obviously some more days on the market, and as we continue to go, what you're really going to see is we're probably going to be working in that threshold of about 60 days. So that threshold between 40 and 60 days is still a slight seller's market, but it doesn't really favor sellers a whole lot. They're not getting very aggressive on pricing. And then when we start to go into more of a buyer territory is 120 days to 150 days. So, we may end up there at the end of the year, and time will only tell. But that's just going to give you a little bit more bargaining at the negotiation table if we get there. So I also wanted, put in perspective of where the sellers are on their side of the table. Sellers are in a very, very strong position. You think about how many sellers have actually took advantage of the phenomenal interest rates that were offered, in the high 2s and even 3%. So I have sellers that say, you know what, gosh, what am I going to do? Sell and then have a higher interest rate? I'll just stay in my house. So you're going to have a lot of sellers that are going to stay put, which is going to help not have a huge influx of inventory. They also have great credit. They also have good paying jobs. So sellers are in a very strong position if they don't have to sell. So I don't think we're going to have a huge influx of homes come on the market. Where you actually see depreciation, or you see homes actually go down in prices, you need to be in a buyer's market, let's call it above 150 days, for at least 3 months before we start to see that happen. And I was looking at some numbers to give you an idea of when that happened was when we had the Great Recession, right? If we all could think about that nightmarish time of our life of when that Great Recession was, we had 18,000 homes available for sale in Orange County. 18,000. Right now, we have 3,400. So that's a far cry as far as, homes that are on the market and homes that are on the market now. So, I don't think we're going to get anywhere near that. So at this point, if you are looking to buy, sell, or invest, I would love to help you with anything that you're looking for. If you just have a question, even about paint color, right? What's going on with painting? What are buyers looking for? And if you're a seller, help put you in a position where you're definitely going to get the most attraction, because it's my opinion that the proper exposure is what creates the demand, and the demand is what drives the price. So I would love to help you out. If there's anything that I could do for you, give me a call on my cell phone. My number is 949-842-0469, and I look forward to exceeding your real estate expectations. Make it a great day.